Happy Tuesday. How you doing? Fix the title for you there. Hey, we're financial advisors here at Jazz Wealth. This is a quick show that we do every day to help our customers here and you guys, those of you that want to watch. We call it the closing beat, so we go over the stock market, let you know how things have gone for the day, the good, the bad, and the ugly. Holy cold. You guys keep it cold around here, man. It's supposed to be Florida. We're all running around trying to find our jackets. Anyways, appreciate you guys joining us here. One of our customers, by the way, sent this in, Mr. Scott K. We've started building a wall of dough, and so I've been having people send in different currencies and stuff. Look at that thing there. That is really cool, huh? It is an uncirculated currency from Bhutan. Never knew it existed. So thank you, Scott, for sending that in. That's going to go on the wall. We're going to keep it in that little case there so that it stays safe and uncirculated. So I appreciate that. We're playing a game called Guess the Dow. Bottom right-hand corner of your screen, you can go take a guess. Where do you think the Dow is going to close? We had someone who wasn't a customer win last week, and so a $100 gift card on the way to Mr. Bryant, I guess was the winner from last week there. Bill, I'm sorry, not Brian, Bill. And also we do classes every week for our customers. This Thursday we're going to do some stats. We'll go over some of the cool things about the rest of the year, stock market. We'll go over some of the performance with the markets given where they're at and everything. We'll run a couple different studies there, so we'll share that with you. We do classes every Thursday. They're live on Thursday nights, but of course archived in the dojo. It's like our own private Netflix there. So if you decide to join us here at Jazz Wealth and transfer accounts from whoever's maybe not helping you out as much, not teaching you, well, you'll have access to that as well. If you do decide to transfer over to Jazz Wealth, we'll even do the transfer for you. So we'll call that person, we'll call that company, and we'll tell them, hey, we're going to steal that account from you. We have no real shame. Small fish in a big pond, so we'll do whatever it takes. Anyways, hey, stock market today, you got 280 lower on the Dow. Good news for those of you who want to pull back. You got 20 points lower on the S&P and 47 lower on the old NASDAQ there. We talked about this yesterday, the narrative changing and how quickly they'll change the narrative to make it seem kind of scary. You guys aren't falling for it, right? You get it, right? You see it all day to day. If you look on like the CNBC and Bloomberg, they have a picture of the guy in New York Stock Exchange. He's all sad and stuff. It's the same picture they always use. But hey, a down day in the market, so it's good news for those of you that want that to happen. Trump. Classic Trump, man. Love him or hate him. His classic Trump is get all the way close to a deal, then back away a little bit or hint that you're going to back away and maybe get them to come back to the table a little bit. So I don't know if it's going to work. I think most people realize it's a negotiating tactic there, but that caused our markets to head lower. He's actually overseas today, made the comment that he would be okay if the trade deal wasn't solved until after the election. So putting a little pressure on the Chinese there. We'll see what happens. There's this back and forth now where the Chinese kind of want to make some deals that we don't agree to, or at least at the moment we don't agree to. And so his actual comments today were, hey, stock market drop is peanuts compared to where it's been, and I won't let that force me into making a deal that's bad for the country. So there you go. A little bit of a pullback in the old classic Trump negotiating tactics today. The problem was we didn't really have any other econ news today. So when you look at the stock market, you got the initial sell-off. We gapped lower on the day. We sold off once the markets actually opened up, but then there really wasn't much to go on. So if we break this down to just kind of an intraday chart, here you go. Here's the gap down. It started off this morning with Trump's comments overseas. Stock market officially opens right here. This is where we opened up for the day, and just a little bit of a sell-off, but then people go, what now what, right? There's no econ news or anything. So you had a lot of these buy the dip buyers in there sort of today, and that's okay. You got the stock market here moving back towards these highs. I'll leave this line because we kind of mentioned this before. It looks as though that's the next support area where the market's trying to head back down to, at least where people will find support or hope to find support. And so if you're looking at the S&P, that's what you have there. NASDAQ, you got the same picture. Here's the prior highs over here. We could just adjust this line a little bit towards these highs. It's going to put you right around the 50-day moving average. I think many people would be more than okay if the stock market pulled back towards that range there, gave them a chance to buy a discount. And the Dow actually getting all the way back there already and showing that this area here, these prior highs, can act as support. So you would expect that many of the traders in the S&P will rely on that same area when the market's if the markets do pull back to it, which at the moment seems like they will. Well, we have a streak that is over. We had 34 days where the stock market did not move outside of a plus or minus 1% range. That's officially over. We'll cover more of that on Thursday for our customers. What does it mean? What does it mean for performance? We actually studied every other time that that's happened, where the stock market hit a streak of over 30 days. It started to pull back after that and had bigger range, more volatile type days. What happens after that? So we'll cover those results. It's not many times that happens. So We'll go ahead and cover that and let you know what's going on there. You ready for the lesson of the day? Got a lesson of the day for you here because you're going to hear a lot more about these tariffs. Did you hear about the French tariffs, the retaliatory tariffs that we're thinking about putting on France? 100% tariffs on their champagne, wines, cheeses, things like that they import over here. And so it gets a lot of questions like, what does that really mean? Well, I want to share this with you here today because it's more of a headline than anything else. We're going to try to get fancy with this chart, so hang in there. If I mess up, don't run away. On the chart here, you can see the increase in revenue from the tariffs. You can see, obviously, when this whole thing started and President Trump really started going crazy, obviously, tariffs increased. This is a 5-year chart, but we're looking back here just over the last little bit. If we compare that to the U.S. GDP, it's next to nothing. Look at the difference in this line. U.S. GDP in the trillions, 21 trillion. And we've got 80 billion, let's call it 81 billion in tariffs coming in there. So, as a ratio, let's see if we could just kind of plot down here at the bottom. Now, this is in millions, so what this works out to be is tariffs, the increase in revenue from tariffs equals out to 0.4% of the U.S. GDP. So it's really not that big of a deal. It's more of a headline than anything else, although you could agree with Trump where he says we're making billions off of tariffs. Okay, there you go. We're making billions. It's actually twice what we're used to making, so it's double. If you go back here and look at the revenue as compared to GDP, it's usually around 0.2%, so we've doubled that. That's something. I mean, that's something to look at, but keep in mind the scale of the actual tariffs that are coming in. 0.4% of U.S. GDP. That's your lesson of the day. It's more of a headline, right? So if you get a little excited and you hear these people freaking out about tariffs, now you know kind of what's going on there. Let's go over to our sector breakdown for the day because there's a lot to cover here, so I'll just dive right in. We won't waste much of your time. You've got, sector-wise, a lot of the different areas of the market starting to test their first support area. Just like I mentioned here on the S&P, you've got the first support area back here at these prior highs. So we haven't quite tested that yet, but if you zoom into the S&P 500, break down the individual sectors, you're going to have a lot of different areas testing their first support on the way back. This is largely seen as the first opportunity to buy with a reasonable expectation that the sector or the individual stock is going to sort of slow down, stop, or bounce in this area. So if we look at transports, IYT is the ETF you can use for that. It's a sector ETF. The 200-day moving average. It's come back to its first support area where most people will at least take a shot. And you saw that today. Look, a little bounce off the 200-day. So people taking a little bit of a shot there. You look at the semiconductors. They're making their way back to the 50-day moving average, which has acted as a loose support area in the past. So you can see we're not quite there yet. If we see another leg down that hits that 50-day or a consolidation sideways, you'd largely expect people to at least take a shot there. Even if it doesn't work, you'll see people take their shots there. Looking over at retail, same thing. First support area after this pullback. We mentioned this as being a sloppy sort of chart. Not the most exciting pullback you want to be interested in buying there, but nonetheless, first support area. You've also got that in industrials here. So here's the 50-day moving average. That's going to be your first support on the way down, and you can already see people attempting to take a shot in there. Gives you an idea of why the market's bounced today. So you got initial bad news there. Markets start to sell off. People realize there's certain areas of the market that are offering support in the short term. And so you have at least a little bit of a bounce there. Home builders also to the 50-day moving average. And currently that is acting as support. It doesn't mean it has to bounce from here. It just means that that's the first area where people could justify a purchase or an addition to their portfolio if that's what you happen to have. And lastly, we'll look at the basic materials there, back to the 50-day, and already people getting a little ahead of the curve. So we do this sort of sector breakdown every day so you can zoom into the market. You look at the index, you look down at the sector, then we look at individual stocks there. It's called top-down analysis. And so there you go. That's a little brief overview. Looking at bonds here today, a 180 quick reversal in bonds. However, as this chart I've been showing here for really every day, bonds remain kind of in a sloppy area. It's very hard to assume that this is going to be a bottom or change in trend in bonds. You can see with the lines I've drawn there, we're kind of stuck in the middle. So while today's move does entice people to take a shot, it doesn't give the all clear signal in bonds there. If you look down at the short-term bonds, also a 180, maybe breaking out of a little bit of a short-term range there, but I think it's way too early to tell. Speaking of breaking out of short-term ranges there, gold miners, let's say. Gold miners have been in a rather sloppy but shallow downtrend, and today gapping above here to try to break out of that range, trying to. I mean, it's a good start, but it's, like I said, it's not the best. You don't have the most perfect series of lower lows and lower highs, although you could argue at least they're there. Downtrend traders are going to be a little skeptical here of the gold mining area, but that's what you have. You've got a bigger move into banks today, down 1.5%. They're the most overbought, I would say, in the short term. Still an undervalued area of the market, but starting to pull back today. A little bit more aggressive. You had some big moves in Goldman Sachs. If you want to zoom into the financials there, Goldman Sachs down 2.5%. Oops, Wells Fargo, I believe, was down about the same, about 2% on the day. That was downgraded yesterday by Raymond James, so a little bit of follow through from that. Losing 2%, and then Morgan Stanley, bigger move there, about 2%. So that's kind of hurting the financials. Just got some profit taking there in the short term. And so there is your sector breakdown for the different areas of the market. Now, individually, stock-wise, you could imagine some of the stocks that have more exposure overseas and would be more sensitive to this trade sort of spat at the moment. Trade war, I guess it's a trade war. We have to call it trade war. Caterpillar down 2% on the day. They don't like to see that. You know, those sort of things are going to show some weakness. 3M we don't talk about a lot, but down about 2%, also very sensitive. They have a lot of business overseas, so that's going to hurt it there. Semiconductors as a whole, if you want to look at some of the names inside of there, AMD, although it did close, finished positive on the day. You got AMD a little bit lower to start. NVIDIA down to start on the day. Just names that have exposure overseas. You know the game, right? This has been happening when trade talks are going well. These stocks benefit when there's a little hint of a hiccup in there. They get a hit. You know, it just unfortunately is what it is. AKS, this is AK Steel is the symbol here, being bought out by Cliffs Natural Resources. That would be ticker symbol CLF if you're following. So they were lower as the acquirer today. AKS is being bought out. It's a stock swap. So you guys ask sometimes, well, how do these deals work out? What do they work out? And what are they going to do in the transaction-wise? Is it a cash transaction? Is it a leverage buyout? Is it, in this case, a stock swap? This is a really interesting one because if you own AKS, your risk just changed, right? So what's going to happen here is with AKS, they're going to do a stock swap, and you're going to end up with 0.4 shares of every 1 share that you own of CLF. And so the way this is going to work is it'll happen automatically. You don't have to do anything there. But I want to mention that this is changing your risk because this is a really interesting acquisition. I'll just spend a second on it. So AK Steel is not your typical steel maker. CLF, or Cliffs Natural Resources, doesn't actually make steel. So you're not staying in the steel space. Cliff Natural Resources, they actually go out and mine for the ore, turn them into pellets, and then they sell them to steel makers. So by Cliffs buying AK Steel, what's happening is you're getting now a company that mines for the sort of substrate, the iron ore. You're getting a company now that also is making steel. However, they don't just make random steel. Steel breaks down into a whole bunch of different categories. You could make steel for rebar, for skyscrapers, things like that. You can make steel for just regular buildings. You could make steel for cars. AK Steel makes these they produce steel for car manufacturers, and that's largely part of their business. So what you're really getting here is if you let this transition happen, you're getting now exposure to a company who is really tied to the auto manufacturing sector there. So if you're not very bullish on auto manufacturing and you happen to own Cliffs, you may want to consider your new exposure in that category there. So you always got to look under the surface a little bit. Maybe 2 lessons of the day for you. Huh? How about that? Look what we do for you here. Roku, a little bit of a reversal today. So yesterday was downgraded by Morgan Stanley. Today you had an upgrade by Needham. Actually, it wasn't an upgrade. They just changed their price target. So Needham moved their price target from $150 to $200. So they were essentially disagreeing with Morgan Stanley. Had a lot of good things to say about Roku. They think it should be more valued like the streamers, like YouTube and things like that. And so Needham is basically saying it's worth $200 a share in the next 12 months. So that's contrary to what we saw yesterday with Morgan Stanley's downgrade on that one. Although Morgan Stanley raised their price target as well, they think it's valued around $110. Big difference there. And also from here, that's about 35% to the upside if you believe in the analyst there at Needham. So There you go. 59.2% of the S&P 500 is above the 50-day moving average. That's down from 73%. We went 73%, 65%, down to 59%. That's a new low here in the short term for the market. It's good news. If you like the idea of buying stocks that have pulled back a little bit, you now have about half of them to choose from that are below the 50-day moving average. And maybe some of you have that as a criteria. You had one new high today, so we squeaked out one. And that's going to be Lamb Weston here. Lamb Weston is it's a food company, actually. Actually, they just launched a waffled hash browns, huh? Right? Go check them out. So they just launched waffled hash browns. So, if there's ever a good reason to buy a stock, it's waffled hash browns. Do you like hash browns? Sprinkle a little salt on there, maybe some ketchup. Anyways, that was your new 52-week high today. I'm hungry. That did it for me. And a nice, obviously, strong performing stocks, up 37% just since the summertime. So just since it made a little low there, up about 37%. You had 5 new lows today. 4 of them were going to be in the oil and space oil and gas category. And then you had Molson Coors. So symbol TAP, Molson Coors hitting new 52-week lows. They just haven't been the same since they started focusing more on, or at least testing some of the hard seltzers. I believe today or yesterday they started testing hard coffees. Is that necessary? Is the beer business that bad that you have to go test other areas? They're looking for the next great thing there. What can they put alcohol in that will get everybody excited? And they're testing out hard coffees. So, it's a good time of year to test out hard coffee, but I don't know. It's kind of weird. And hard seltzer. Why? What are we doing? I don't know. So anyways, Molson Coors down 1% today, new 52-week lows. If you happen to own this company, so it's a pharmaceutical company here. I don't know how to say it. I just call them bold. It's a gene therapy company being bought by a Japanese company for $3 billion or $60 a share. That's 100+% premium as to where it was trading yesterday. That's how these biotechs move. Yeah, that's crazy. So they're getting bought out. It'd be $60 a share just paid for. If you happen to own the stock, I would hold out for the $60 a share instead of the 58 there, as long as the deal goes through. Also, you got Restoration. Earnings tomorrow. You got Campbell Soup, Five Below, H&R Block, Restoration Hardware, and Slack. Restoration Hardware will get some attention because, remember, Warren Buffett has just taken a large position in this company here. This is a very volatile stock to own around earnings. I want to share this with you real quick. 86% of the time they beat on earnings, 64% on revenue, 64% of the time they're also positive on earnings day, but when they're not, you better hold on tight. This is an extremely volatile stock. It's up 116% since June. However, last earnings report, it gapped down 2.2%. You go, that's not that big of a deal, Dustin. No, not too bad of a gap there. I can handle that. Average gap for the stock is positive 3.58%. But go back 2 earnings quarters ago, and you have a gap higher of 26.5%. Go back another earnings, you got 14.5% to the downside, 17% to the upside, 5% to the downside, 22% to the upside. You have a recipe for a stock that if you're wrong, you're going to be very wrong on that one. So if you own the stock, hang on tight. Earnings tomorrow after the close. We'll see what happens. If you like Warren Buffett, you think if it's a good long-term play with him, I can't imagine him making any major changes after what happens tomorrow. It's a new position for them, but it's going to get some headlines, especially if it happens to gap down, because, then people are going to kind of wonder what Warren Buffett's doing there, but we'll see. So that's what you have there. Also, after hours here, Larry Page stepping down as one of the CEOs of Alphabet, leaving the other, Sandahar, I can't remember his name. Leaving the other CEO in charge of both Alphabet and Google. So that's what you have there. What else? Well, I don't really think I have anything else here. Remember, you got Berkeley taking over in the S&P 500 Thursday. You also got a lot of changes in the S&P 600. And then one more here. This will happen next week. Old Dominion. So Old Dominion, ODFL is a ticker symbol. They're going to be taking over in the S&P 500 for SunTrust. So SunTrust getting booted out of the S&P 500 on the 9th of December, and Old Dominion Transport going to be taking their place there. So a couple changes in the S&P 500, lots of changes in the S&P 600 and the S&P 400 if you happen to be a DIY, build-it-yourself index fund investor. Okay, I'll take your questions if you happen to have any here. Let's see what we could do. Kevin says, hey, hypothetical. I like hypothetical, man. I can't get in trouble for hypothetical. Could you and your wife put $12,000 total into a Roth IRA and deduct it from your taxes, then take out the contributions, repeat it next year to get the $12,000 deduction? You don't get a deduction in your Roth IRA. So could you, being under the age of 50 and being eligible for the Roth IRA, could you put $6,000 for you, $6,000 for your wife, married filing jointly? You guys want to do that? You could, there just wouldn't be a tax deduction. So there's no game to play there. Yep. There you go. You guys doing the whole political thing there. Nicole helping us out there. Thank you. I appreciate that. Cool. So Nicole's right by saying if you wanted to put money in, say 6,000, take it out, then put it back in. As long as it's not in the same year, you could. So you can't put 6,000 in, borrow from it, right, and then come back in the same tax year and put the money back. That's not allowed. You could take 6,000 out, like that you put in for 2019, wait for the calendar to turn over to 2020, and then contribute for that new year, but you couldn't recontribute the same 6,000. Common mistake people make. The IRS will not miss that, by the way, if you happen to do that. I'm jumping into politics? What did I say about politics, man? Just telling you what's going on. Only politics I care about is that it affects your dough. All the other stuff we can save for another channel. Someone else can deal with that. I don't claim to be an expert there, but when they start messing with your dough, that's when we're going to talk about it. Can we take a look at Alibaba? It's done well. I know it's done well here. Alibaba pulled back here in the short term. You got to expect a little volatility with the trade deal stuff going on there, but you're shorting the stock, thinking it'll take a hit with the trade deal going soured. Well, so far so good, depending on where you started. You're asking me to make an assumption based on a trade deal. I couldn't do that. I don't know if the deal's going to go through or phase one will go through before the election. I don't know. I don't see why you couldn't have phase one and phase two go well. I think part of what Trump was doing today was a little negotiating. I don't think it's the end of the deal there. But that's just an opinion. I really have no idea what the man's thinking. Yep. Do options pay dividends? So if you're the seller of the option, you are not entitled to the dividend, but you technically get it in the credit if it's close. If you are the buyer of the option, you are essentially you're getting the dividend. Yeah, you're entitled to it. It's in the price, though. It's not like you're going to get a credit of some kind. Common mistake there. People sell covered calls and they think, hey, where'd my dividend go? Or, hey, why did I get assigned? Should be no reason I got assigned. Dividend. Name of the company that Warren Buffett just bought was Restoration Hardware. RH is the ticker symbol. Yep. You like Costco here moving to new highs? Well, I mean, it's held up nicely, so there's no reason it couldn't make a run. It has that kind of volatility where it could make a run. I don't know if it gets there before December 12th, but, could it? Yeah. You're not asking for it to make like a 40% move. As a day trader, if I execute and buy and sell on the same day versus me holding a position for 1 year, the amount I will have to pay in taxes, is that a different amount? Oh, absolutely. So if you're day trading stock and you make a profit, that just counts as income. It's ordinary income. You will pay tax in that, well, you're supposed to pay tax in that year, versus if you buy a stock and you hold it for a year and 1 day, you would owe long-term capital gains. Could be 0, 15, or 20%, depending on your income there. But as a day trader, absolutely, you want to make sure you structure that right. If you're an active day trader, don't just open a random account and start day trading. Talk to your accountant. Talk to a day trader. Do it right. Don't pay any more tax than you have to, please. What are big stock names in foreign markets? You're trying to wrap your head around other markets. You don't know where to start. Well, start with the more popular ones in China. You can go like Alibaba, BABA's ticker symbol, JD.com, JD, Baidu, BIDU. Alibaba is also on a Hong Kong exchange now, so that might give you a good starting point just to kind of wrap your head around how are these things going and how do they work with other countries. Mercado Libre would be a good one. I believe Argentina is where they're at, and Brazil now, I think. So that could give you a good start. I'm not sure what you're trying to wrap your head around, but at least those are some stocks that are foreign companies that you could try to dig into. Yeah. Oh, the chat's turned into. I can't control what you say. Do Roth accounts have a pattern day trader rule? It's not that the Roth has the pattern day trading rule. Roth accounts aren't allowed to have margin for day trading. And so when you have margin, that's when it starts the pattern day trader calculation. Just having an account like a Roth IRA doesn't allow you to have that margin, so you wouldn't be able to. You could break the pattern day trader rule and you would be in trouble and you'd be like frozen out if you kept doing it, but you wouldn't actually have margin anyways. So you might find that when you buy something, if you sold it in the same day, that money is not technically available for you to go trade again. So you wouldn't have the access to the cash. Therefore, the trade wouldn't actually go through. You'd likely get some pop-up window or an error message saying you don't have the available funds to place this trade until it settles 2 days later. You're getting into some geeky stuff there. Stretching my brain. I like it. Kevin says he's got $6K waiting in his Roth IRA in cash, waiting for the markets to fall. I just wouldn't. I wouldn't wait. To be honest, lump sum investing always beats trickling in or recurring type investing. Even if you guess the top. Did a great video a while back on what happens if you held on to cash, didn't invest it until the market actually hit a top before it went into some major decline. Then you just held that position, saved up your cash, you didn't actually invest, and then when the markets rallied all the way back, hit a new high, you took the remaining cash that you had and you invested that. Even if you did that, you do better in the long run. So it's hard to say. It's hard to say dive in when you see the markets pulling back. But if you're a long-term investor, I don't like the idea of that sort of timing there. That being said, with no costs or anything, you certainly could trickle in. Nobody's going to fault you for that. I mean, that's certainly one way to go about it. Oops, there was a question somewhere. I didn't realize this thing was behind. Can you contribute to a traditional IRA to lower your taxable earnings to get below the Roth IRA contribution limit? You could technically lower your taxable earnings. However, you couldn't, if you put $6,000 in your traditional IRA, you found that you were going to be under the adjusted gross income or modified adjusted gross income limit, you can't go contribute to the Roth because you already contributed to the IRA. So IRA, Roth IRA, the IRS treats them as if they're one. So if you put $6,000 in one, you can't just go put $6,000 in the other. You guys are really trying to game the system today. I like it. That's cool, man. I like the plan there. Has Hasbro to before earning after Q4, people are going to not buy toys. Oh, you think after the holidays there, no more toys? Yeah, well, we'll see. Are consumer goods, specifically Procter & Gamble, too high in the short term? So meaning you are wanting to trade it in the short term. If that's the case, I'd go find something else to trade just to get a little more activity. If you're saying, hey, is it a little overbought in the short term, you could make that argument based on where it's at, but I don't know what your goal is. Like if you own it and you're a dividend player or something, then you're not so concerned about trying to get a 10% pullback at the moment. I think you might have to wait a while, but I'm not sure. Hopefully I didn't misunderstand your question. There you go. All right, well, it's some good questions today. I like some of these questions, and I like the deep thinking there where people kind of dive in and see where's the advantage. Can I find an advantage there? I appreciate the comments and the questions. We will wrap it up there. It looks like I've covered everything I need to cover. I did. Have a great rest of your day. Thank you so much for watching. I really appreciate it. It takes a lot to put this show together. We're actually working on some automated stuff for the graphics in the background, but still, it takes a lot of work to put it together. I appreciate you guys just being here watching. If I've helped you in some way, maybe you'll want to hit the subscribe button. I appreciate that. I saw we had a great spike in subscribers or something. I don't look at that often, but I thought the number was a lot lower. So awesome. I appreciate all the support. You guys have a great rest of your day, and we'll be back tomorrow. Do this all over again. Enjoy.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.